I'm going to give you a break, maybe two, at the start of the CARES Act and at the end of the Paycheck Protection Program loans. So, want to do that. You should have been able to go out and download my handout file. That's where you're going to find the PowerPoint slides. And there's another handout file we call the reference file, where I have a short write-up on what they did with phase 1, 2, and 3. And phase 4 was really just an extension of what I call phase 2. And probably the most useful part of that reference file is I have a number of appendices. For example, and I forget which appendix this is, there is a copy of the Joint Conference Committee report, which explains what the tax provisions are in the CARES Act. Rep Proc 2020-25 is the one that deals with bonus depreciation, where it makes tenant finished leasehold improvements, qualified improvement property, 15-year property. Notice 2020-32. That's the one that they came out with, which denies a deduction for any expenses paid from a Paycheck Protection Program loan, which is forgiven. Retention credit. That's actually in Appendix J. And they just revised that this weekend. That is 94 questions and answers. And that retention credit is available for both a large and a small business. Then Small Business Administration came out with a guide on self-employed people. That's Appendix AA. So I mentioned the retention credit which is Schedule or Appendix J. They also came out with one WW, which deals with how the CARES Act affects retirement distributions. Didn't really answer the question. It's really one that came out this morning. Notice 2020-29. That deals with extending the grace period for somebody that has money in a flexible spending account. They actually have until 12/31/20 to use the remaining balance in their flexible spending account, which remained as of 12/31/19. And I think the plan has to be amended to provide for that. So we did that. And then what you should see on your screen, you should see two screens within your screen. The screen on the right should be the PowerPoint slides, and the screen on the left should be the obnoxious talking head, which is me. If you only have one screen up, click on the one that's up, and it will bring up the other one. And if you keep both screens up during the presentation, you will always see me looking left, because I'm generally reading off the front of the screen, or the screen in the front of the room, rather than at my laptop. So I apologize for that. If you want to get rid of the obnoxious talking head, all you have to do is click onto the PowerPoint slide once, and it will then occupy as much or as little of the screen as you so desire. The other thing that you should see there is something that looks like a little bubble. Point or purpose of the little bubble: if during the presentation you've got any question, click onto that little bubble, send me an email, make it as cryptic or as lengthy as you so desire. I've got another screen in front of me, and when I see your question come up and I'm not in the middle of something, I will stop and pull up your question. And then in the event that I don't answer your question, you couldn't think of your question comes up later, feel free to send me an email. My email, I got two emails, both of which work. They're on the second page of the PowerPoint slides. They're also on the front page of the PowerPoint slides. And I get various questions, not only with regards to this, but on other things. And probably 20 to 30 a day. I'm a little bit behind, but send me an email. I'll get back to you. And I'll give you my 2 cents worth. And somebody sent me an email this morning. And a couple of things. One was, if I reimburse my employee for their cell phone, is that a utility expense? And my reaction was, I don't think so. And if you're that hard up, you should give your Paycheck Protection Program loan back to the federal government. Another one asked me this morning, is workman's compensation part of the payroll cost? I don't have the foggiest idea because it's not addressed. And I'll bring that up again. So if you got a question, and make sure you get as many questions as you can think of answered during the presentation. Also makes it a bit more enjoyable. And I will pop up the questions on the front of the room so everybody can read it as I read it. And I'll give you what I think the answer is. The other thing, last thing, in the event that you have any type of computer problem, talking head gets out of sync with the slides, your slides freeze up, you have bad audio, other than my terrible voice. We got a tremendous amount of bandwidth moving from here to Wisconsin, and it's actually a video stream and a voice stream. And because I write on my PowerPoint slides, it makes it an awful lot of bandwidth. They put it together and then push it out to your internet provider. And don't tell me that there's such thing as good internet. It all gets slowed down sometime. Probably the quickest way to clear up the problem. Go to the top of your keyboard and refresh your browser by just clicking on F5. That generally will clear it up, but don't just sit there. Call the number 720-389-5900 and somebody will help you out with whatever problem that you have. And then what you're able to do, you don't have to watch the whole thing. You can go out and rewatch the parts of the video, or whatever you want to call this, that you got interrupted, you fell asleep, you phased out, whatever. And what we will do is always post the latest recording and the latest slides, and so that you can see, and you might look at the reference material. Your reference material, I think, now ends at Appendix YY. I'm going to add that notice, 2020-29, to it after we finish today. I don't know how many more changes that they're going to come up with, because this is a moving target. And you never know what's going to happen until they actually do it. So I don't know how much more it's going to change. I don't think it's going to change substantially too much more until they come up with phase 5. So we did that, done that. Now, if you kind of looked at the slides, this is kind of an index to the slide. I call this phase 1. The first legislation was on March 6th. Phase 2 was Family First Coronavirus Response Act. That was March 18th. And then the president signed the CARES Act on Friday, March 27th. And this is just an overview of the provisions. And then phase 4, president signed on Friday, April 24th. That was the one that extended the Paycheck Protection Program loan provision. And a week ago, or last Thursday, last time I did this, they were about halfway through the money. They were halfway through the money at the end of the first week. And I don't know if they gave the rest of the money away. There still might be a little out there by the end of last week. So there's probably still some out there. This is the IRS guidance on COVID-19. I'm going to go through this pretty quick today, because if you're not aware that they've extended everything to July 15th, then you have not been in touch. So, and I'll give you a break right in here. CARES Act, that's the bang for the buck. That's really the Paycheck Protection Program loan. And a bunch of things on the Paycheck Protection Program loan provisions. And we'll go through that. After I finish that, I'll give you another little break. And then where I'm going to end up today, and I guess these are just individual provisions of the CARES Act. And I'll go through those in some detail. The business provisions. And when I quit this afternoon, whatever time I quit, or whatever time you decide to leave, what I'd like to do is to be up to about slide 379. And then I wrote down phase 5. We're not finished with this stuff yet, and we'll see what happens when they begin to kind of loosen up the restrictions as to whether or not we have a reoccurrence, and they have to shut it down again. Regardless of that, they're going to have a phase 5. This is not, you're going to notice when I get to the Paycheck Protection Program loan, they have a June 30th date. And then federal government has extended everything to July 15th. They're talking about extending that again to August 15th, maybe September 15th. And maybe we won't have to file this year, who knows, but it is what it is. Now, try to do this as efficiently as possible. Phase 1, Congress awarded $8.3 billion for emergency funding to combat the coronavirus pandemic. Okay, and you can look at that, and what they did with the $8.3 billion, they awarded $3 billion for research and $1.25 billion to fight this on an international basis, public health funding, medical supplies, and my daughter's a trauma surgeon, and I know she had to buy, when they were still available, her own face shields and her own personal protective equipment, just because they didn't have enough to pass around. So that was very early on. Then on March 18th, they came up with the coronavirus, Family First Coronavirus Response Act, which actually came up with the Emergency Family Medical Leave Act. That's my abbreviation. And as part of the Emergency Family Medical Leave Act, they came up with the Emergency Paid Sick Leave Act. And this, by the way, if you're engaged or you do payroll, what you're concerned about is Appendix BB. And how much of the payments to the individuals that are collecting under this Emergency Paid Sick Leave Act, Emergency Family Medical Leave Act, are subject to Social Security, Medicare taxes, withholding, whatever. And you might know the payments under the Emergency Paid Sick Leave Act, Emergency Family Medical Leave Act began on April 1st. Payments under the retention credit, which is available to a large and small business, which was adversely affected by the coronavirus. Those payments actually, and the credits, actually began on payments on or after 3/13/20 through the end of the year. Emergency Family Medical Leave Act available to somebody with less than 500 employees. And if you're a full-time or part-time employee under the Emergency Family Medical Leave Act, you had to work for at least 30 days, and in the statute it says 30 calendar days, which means for the last month. So it's not 30 days divided by 5, which is 6 weeks. It actually is the last 4 weeks or the last 30 days. And this is the one that's not available for the first 10 days, 14 days, if you include Saturday and Sunday. And they give you a max of 10 weeks. I can pay you more, but I'm not required to pay you more than the lesser of 2/3 of your regular pay or $200 a day. And that's what the credit is tied to. And under the Emergency Family Medical Leave Act, the maximum amount of credit for 50 days of work, which is 10 weeks, is $10,000. And how much of that is subject to Social Security Medicare tax? And this is in question and answer number 11. Under both the Emergency Paid Sick Leave Act, the Emergency Family Medical Leave Act, if you've got less than 50 employees, I am not required to give you time off and pay you for taking care of a child whose school or child care facility is closed where the viability of the business is threatened. They've never come out with any guidance on when not that I know of, on when the viability of the business is threatened. That's supposed to come from the Department of Labor. And the employment attorneys are going to have a field day with regards to a lot of this, because I'm not going to pay you. The Emergency Paid Sick Leave Act, that's the one that's available immediately to both a part-time and full-time employee. I am required to immediately pay you up to $511 per day if you've been advised to quarantine yourself because you've contacted somebody, came in contact with the coronavirus. And it's actually the lesser of your regular pay or $511 per day. If you have to take off to care for your spouse, your significant other, your son or daughter, where the school is closed or child care facility is closed, I'm required to pay you immediately the lesser of $200 a day or 2/3 of your regular pay. That's a labor law problem. That's not a tax problem. That's kind of a payroll problem. So I can pay you more. I'm not required to. I can't pay you less than that. And these payments began on April 1st. So that's when both the Emergency Paid Sick Leave Act, the Emergency Family Medical Leave Act took effect. Now, the big deal about this, if you do payroll, is the credits. And they say there's 4 credits. There's actually only 2. One under the Emergency Paid Sick Leave Act for an employee, a self-employed person, and another credit that's available under the Emergency Family Medical Leave Act for both an employee and a self-employed person. And they came out with the Form 7200 and instructions to the form. If you do payroll, if you wanted a refund of your payroll taxes. Now, under the Emergency Paid Sick Leave Act, on slide 15, if you've been diagnosed, came into contact with somebody with the coronavirus, I, as an employer, am required to pay you 100%, the lesser of 100% of your regular pay, or $511 per day. If you're taking off to care for a significant other, a child, whose child care facility is closed, I'm required to pay you the lesser of 100% of your regular pay, or $200 a day, for a max of 10 days. So the maximum credit up here that I'm available, that's available to an employer to offset their 941 taxes is $5,110 or $2,000 if it's to care for a family member or child whose school is closed. Under the Emergency Family Medical Leave Act, I'm required to pay you the lesser of 100%, or I'm sorry, lesser of 2/3 of your regular pay, or $200 per day for the up to 10 weeks of time that you're going to take off. So the maximum credit that I'm available, that's available under the Emergency Family Medical Leave Act is $10,000. Emergency Paid Sick Leave Act, 5110 and 2000. The Emergency Family Medical Leave Act is $10,000. So you're quarantined for 2 weeks, you're diagnosed with it, it takes you a month to recover. Then probably what's going to happen? First 2 weeks, you're going to get the up to $51.10. And then for the next month or so, up to the next 50 days, we're going to pay you up to $200 a day. And maximum amount of credit that my employer will receive is $10,000. These are the credits. I can pay you more, but this is the maximum credit that I'm going to receive to offset my payroll taxes. Now, what taxes are offset by the $5,110 to $2,000 or up to the $10,000? And this comes from the instructions on page 2 of the Form 7200. Also, they put this in News Release 2020-57. Any payroll taxes that I pay on behalf of you and other employees, including federal income tax withheld, your share of the Social Security Medicare tax, and everybody else's share of the Social Security Medicare tax. The Social Security and Medicare tax that I pay to people that are not affected, as well as the Medicare taxes that I pay on your behalf. And this is question and answer 57. The employee, if you're the one that's receiving the $51.10, the $2,000, or the $10,000, it's treated as regular pay. Subject to Social Security, subject to Medicare tax, subject to federal income tax withheld. I, as the employer, am not required to pay Social Security tax on your share. I am required to pay Medicare tax. That's why this is really a payroll tax. And let's assume that I pay you for 50 days. I pay you the $10,000. And during that period of time, I'm just coming up with the number. I also pay on your behalf $2,000 and group health insurance benefits on your behalf to a group plan which are not taxable to you for purposes of the credit. And this is in Appendix EE, question and answer 33. And I wasn't sure from reading the statute whether this additional $2,000 was subject to that $10,000 limit, the $51.10, or the $2,000 limit. The health insurance premiums that I pay on your behalf, which are excluded from your gross income, are added in. So I, as an employer, am entitled to a total credit of $12,000 that I paid in on your behalf. And what this means here is the $7,200, Form 7200, means that it's refundable. If on my 941, the taxes that I'm submitting are something like $16,000, and I'm entitled to a credit for wages paid, $51.10, $2,000, $10,000, as well as the health insurance added in, then I get it, and my credit amount amounts to $20,000. I can get a refund by filing a 7200 for the $4,000. That's why this is really a payroll problem. Or I can use that as an offset against my next quarter's payroll deposit. So it's somewhat as simple as that. And then credits are refundable. Mention that. Number 7, employers do not receive the credit if they're also receiving credit for family and medical, paid family and medical leave under Section 45S. And you're saying, what the heck is Section 45S? That was something that was added by the Tax Cuts and Jobs Act. And I've never prepared a return where somebody has put this in place. That's the Form 8994. That's great. And then they came out with a notice in 2018 explaining I think it's about 40 to 50 questions and answers dealing with Section 45S when I pay you pursuant to that family and medical leave because I'm not otherwise subject to the Family and Medical Leave Act because I don't have at least 50 full-time employees. And what I was wondering about is they had to have a reason for coming up with the $200 a day, lesser of 2/3 of your regular pay, $200 a day. And they had to have a reason for the $511 a day. And under Section 45S, for 2020, it says if I'm an employer that has, small employer that has adopted the family and medical leave, I am required to provide for leave for anybody whose compensation is at or below 60% of the definition of a highly compensated employee. So I've got to pay any employee that is 60% of the definition of a highly compensated employee. Highly compensated employee for 2020 is somebody that makes $130,000 or less. Well, 60% of that is $78,000. Divide the $78,000 annual salary by 52, $1,500 a week. Divide it by 5 days in a week, you get $300 a day, lesser of 2/3 of your regular pay, or $200 a day. And I don't know if this is what they did. What's 2/3 of $300 a day? Well, it's $200 a day. I think that's where they came up with the $200 a day. And for the life of me, first time I did this, I couldn't think of where they came up with the $511. And about 6 or 8 people said, you're a dummy, and I agreed, and said it's the FICA wage base for 2019 of 132.9 divided by 52 weeks, 25.55, rounding up or rounding down, divided by 5, well, that's $511 a day. And notice what I did here. I used the FICA wage limit for 2019, but I used the definition of a highly compensated employee for 2020. You think they're that screwed up? They probably are. And what I was thinking, the FICA wage base for this year, 2020, is $137,700. That divided by 52, divided by 5, gives you a per day rate of $530. So I said they probably used the wrong number, but it is what it is. And then if you haven't heard this yet, they're expecting the FICA wage limit for 2020. I'm sorry. This is the amount for 2020. They're expecting the FICA wage limit for 2021 to be $141,900. And we'll see if it ever gets there. And then a couple last things here. The Emergency Paid Sick Leave Act, Emergency Family Medical Leave Act is for payment from 4/1 to 12/31. The retention credit, which is available to a large and small business, is available for wages paid on or after March 13th. This you have to have less than 500 employees. There is no size restriction on the retention credit. If I'm a self-employed person, I as a self-employed person am also entitled to this Emergency Paid Sick Leave Act, max of $511 a day, and or the lesser of 2/3 of my regular pay, or $200 a day. You're going to, they've got, this is also in Appendix B. You're actually going to take this credit on your 2020 tax return. And they've got 6 or 8 questions in Appendix B, and I've got probably 6 or 8 questions in the last 5 or 6 pages of these slides, and I'll never get there. So I'm just telling you that right now. And this is just another reminder that if I do pay somebody pursuant to this Emergency Paid Sick Leave Act, Emergency Family Medical Leave Act, their wages that I pay them are still subject to Social Security Medicare tax to 6.2, 1.45%. I, as the employer, and I don't know why they did this, I'm still required to pay Medicare taxes of 1.45%. I am not required to pay the 6.2% on the wages that I pay them. That's why I say this is really a payroll tax problem. Phase 3 was signed by the president, going on 2 months ago, on Friday, March 27th of 2020. In very broad terms, this is the one that was going to send $1,200 to every American, $2,400 to every person that's filing a joint return, $500 for every child. And the devil's in the detail. They were going to add $600 a week for unemployment benefits, extend the unemployment for another 13 weeks, make $500 billion of loans on investments to businesses, states, and $32 billion in grants to the airline industry. And Act Section 1102 is the one that deals with that Paycheck Protection Program loan. And Act Section 1106 deals with how much of that Paycheck Protection Program loan will actually be forgiven. We'll come back and go through the details. And you might note the covered period for the Paycheck Protection Program loan is from actually February 15th, problem is, wasn't available then, to June 30th of 2020. And I'll show you why I mentioned that. Delay of student loans and no accrual of interest. So, and I got this wrong the first time I did it. And somebody sent me an email, said, I'm an idiot. And they said, didn't you know that that was only available, not for privately held student loans, only student loans, guaranteed student loans guaranteed by the federal government. So if I've got a student loan out there guaranteed by the federal government, I don't have to make any loan payments from March 27th to 9/30/20, which is 188 days, as I recall, after the date of enactment. And there's no accrual of interest for that period of time. So that's very fact specific. Then, with regards to slide 22, they call this the Pandemic Unemployment Assistance Program. Normally somebody that's self-employed, a shareholder, an S corp, partner in a partnership, cannot collect unemployment. They made an exception. Emergency increase in unemployment compensation. And I'm still not sure how this works. I guess everybody that's on unemployment is entitled to an additional $600 per week up until July 31st of 2020. That's as much as I know about it. And no waiting period. And evidently there's now 33 million people, at least 33 million that have applied for unemployment. No waiting of 1 week. Problem is, I probably had to wait at least a week or so before I could get on the unemployment website because it was crashing to apply. Additional 13 weeks of unemployment funded by the federal government. We're just going to print the money, and this one was $2.some-odd trillion, give or take. And then they did some other things with regards to unemployment. And then recovery rebates for individuals, just a quick overview. I've never seen so many people worried about where's my $1,200, my $2,400. What do I do if the person died? What happens if I got my child received the $1,200? Everybody sent me an email on that. I said, spend it and let them catch you. And that's not the correct thing to do, but it's free money, $1,200, $2,400. And this is the one that they've been coming out with daily guidance on. I'm going to guess the daily guidance will stop on May 13th. And I think that's the last day that you can go onto the federal government's website and file as a non-filer. Put in your Social Security number, your name, your address, your bank information, and we will send you the $1,200 or the $2,400 depending upon your filing status. And if you haven't filed the 2019 return, we'll give it to you based on your 2018 return. If you've always owed money, you have the opportunity to go on the website and to put in your payment or your bank deposit information so that you could directly receive that as a deposit into your account. So it is what it is. And then this one, waiver of, next one is, this deals with, there's no 10% penalty for premature distributions. You have up to 3 years to repay it. Increase the loan amounts from $50,000 to $100,000 if your plan allows for a loan, as long as the distribution is coronavirus related. We'll come back to that. Devil's in the detail. Waiver of required minimum distributions. Well, what happens if I receive my distribution in January? I receive monthly distributions. Can I roll it back over? I don't know. So we'll talk about that. So waiver of required minimum distributions in 2020 for everybody. You're going to get an above-the-line deduction if you don't otherwise itemize for 2020 of $300. And I've never seen so much guidance for a bunch of stuff that's only going to last 1 year. No, if I'm an individual, I can take a charitable contribution, not limited by 30%, 50%, or 100%, or 60%. I can take up to a charitable contribution of 100% of my adjusted gross income for a C Corp, rather than a 10% taxable income limitation increase to 25%. Contribution of food inventory, which I've never prepared a return, where they've done this, goes from 15% of my taxable income to 25%. That's great. Exclusion of certain employer payment of student loans. They amended the provisions of an educational assistance program to allow an employer to pay up to $5,250 of interest and guaranteed student loan payments on behalf of an employee. Don't ask me why they did this. Remember in the Further Consolidated Appropriations Act that they added a provision which allows somebody to use up to $10,000 of money in their qualified state tuition program to pay for student loans and accrued interest. And rhetorical question right now. How many partnerships and S corporations have in place either an educational assistance program, which is a Section 129 plan, or an educational assistance program, which is 127, or a dependent care assistance program? And the answer to that is virtually none. Why? We'll come back to it. Employee retention credit. And this is the one that is available to a large and small business. This was updated again, 510 to 512. So they added a couple more. They didn't add some questions. They changed the answers to a couple questions. So Appendix J, if this is the one that's available to a large and small business where their operations were fully or partially suspended, or there's a declination in their gross receipts of more than 50% in using this quarter as compared to a quarter ago. We'll come back to it. So, and go through some specific. That also is a payroll problem. And retention credit is available for wages paid 3/13 through the end of the year. Did I have more than 100 full-time employees or 100 or less, based on 2019? We'll come back to it. employer payment of payroll taxes. This is the Social Security tax. My employer's share of the 6.2% Social Security tax. Don't have to pay it in for payments through March 27th through the end of the year. And if you applied for a payroll protection program loan, you can defer the payment of the 6.2% until your paycheck protection program loan is forgiven, all or a portion of it. So that's great. Modification of net operating losses. If I generate an NOL in 2018, 2019, 2020, mandatory back 5 years, forward forever. So there's no 80%, there's also carry back of 5 years. I can deduct my NOL to the extent of 100% of my taxable income. When does that apply? They fixed the NOL glitch for a tax in the Tax Cuts and Jobs Act for a fiscal year ending sometime in 2018. Did the no carryback rule apply for taxable years beginning after December 31st, 2017, which means you could carry it back 2 years, or did the no carryback rule apply to a taxable year ending after 12/31/17, which meant no carryback? And the IRS took the position that the no carryback was for taxable years ending after 12/31/17. They fixed that and now allow you to carry that back for 2 years. And so we'll come back to the details on that. How many tax returns have you filed for an individual where the total losses from all trades or businesses exceeded $250,000 or $500,000, married filing a joint return in 2018, was supposed to exceed $255,000, $510,000 for 2019, and $509,000 and $518,000 for 2020. I've only prepared one tax return where the software kicked out a Form 461H, and I did that return on 11/14 or 10/14. 10/14/19 for 2018. That's that Form 461, statutory provision 461L. That has been suspended for 18, 19, and 20. So I got to go back and fix whatever I did last year. Minimum tax credit carry forward. And for taxable years beginning after December 31st, December 31st, 2017, there's no AMT that applies to a C Corp. And if a C Corp has a minimum tax credit carry forward, it was going to get part of it back for 2018, 2019, 2020, and the rest back in 2021. And what they did there is they eliminated the last 2 years. You get back your entire minimum tax credit carry forward in 2019, or you can file a special election to get it all back in 2018. We'll deal with that. Modification of limitation of business interest. Form 8990, 163J. If your average annual gross receipts for 2018 for the 3 immediate preceding years exceeded $25 million, your business interest expense limitation was limited to 30% of your adjusted taxable income. For 2019-2020, if your average annual gross receipts for the 3 immediate preceding years exceeded $26 million, then your business interest expense limitation was limited to 30% of your adjusted taxable income. What they did with this provision is you can use up to 50% of your adjusted taxable income for 2019 and 2020, and you can use the for 2020 adjusted taxable income. You can use your 2019 adjusted taxable income. We'll come back to it. And a lot of this, what they did here, dealt with 163J7. You're saying, what the heck is that? We'll talk about it. And how many businesses do you prepare a return for? where the average annual gross receipts for the 3 immediate preceding years exceeded $25 million in 2018, $26 million in 2019. I don't do any of that stuff. Maybe you do. That's for larger public accounting firms. You might have run across this, however, with an investment type of partnership. Number 7, this is the one where they changed, retroactive to 2018. Recharacterized qualified improvement property from 39 years to 15 years. Qualified improvement property, fancy word for tenant finished leasehold improvements. Definition of qualified improvement property is any improvement to the interior portion of non-residential real property where that improvement is made after the property was placed in service. That was one of the 80 glitches that they had in the Tax Cuts and Jobs Act. Tax Cuts and Jobs Act forgot to recharacterize that as 15-year property. And this was kind of a bone of contention between the Democrats and the Republicans. They agreed, and now retroactive to 2018. You can treat qualified improvement property as eligible for bonus depreciation. We'll come back to that. So, and that RevProc that I mentioned down here deals with the options that are available. Also includes a couple of other things. Temporary exception excise tax type of partnership. Number 7, this is the one where they changed, retroactive to 2018. Recharacterized qualified improvement property from 39 years to 15 years. Qualified improvement property, fancy word for tenant finished leasehold improvements. Definition of qualified improvement property is any improvement to the interior portion of non-residential real property where that improvement is made after the property was placed in service. That was one of the 80 glitches that they had in the Tax Cuts and Jobs Act. Tax Cuts and Jobs Act forgot to recharacterize that as 15-year property. And this was kind of a bone of contention between the Democrats and the Republicans. They agreed, and now retroactive to 2018. You can treat qualified improvement property as eligible for bonus depreciation. We'll come back to that. So, and that RevProc that I mentioned down here deals with the options that are available. Also includes a couple of other things. Temporary exception excise tax for alcohol used to produce hand sanitizer. Okay? That's great. Phase 4, Friday, April 24th. As the President signed the Paycheck Protection Healthcare Enhancement Act. All they did was extended the Paycheck Protection Program loan until it again runs out of money. And I think it's out of money. Or there might be a little left. And they didn't change the requirements for application, nor did they change the requirements for forgiveness. And what they did in this one, they gave another $310 billion to the Paycheck Protection Program loan. $175 billion was used by the end of the first week, and my best guess is probably another $100 billion or $130 billion plus was used last week. So they're probably out of money. And what they did is they gave $50 billion to the economic injury disaster loans and another $10 billion to the economic injury disaster loan advances. I've got a question on that later on. So you can look at what I've got here. The total bill was $484 billion. So the CARES Act was $2 trillion. This one, extension. And what they did on the other one, probably another half a trillion dollars. So we're probably at least $2.6 trillion in spending. They're not worried about any deficit. They're worried about keeping the country alive and the economy going. And we'll see what's going to happen in 3 to 6 months from now. And so that's 310, smaller banks and economic injury disaster loans, the advances. I've got a PNC Bank announced that it wasn't going to accept any more applications. Chase Bank said the same thing. First Bank said the same thing. And I think Wells Fargo also announced kind of the same thing. And the bone of contention with regards to this is the one that caused the most concern. If you looked at Appendix L, it's FAQ number 31 and FAQ number 37. You have to certify you that not have, due to the uncertainty of the economy, you do not have enough funds available to get you through these trying times. And you are also certifying, this was added afterwards, you are certifying that you have no other sources of liquidity to help you carry your business through these trying times. And somebody from an insurance company that I know contacted me, and they said that they were very conservative, and they turned down, I told them not to, but they turned down a $3.7 million Paycheck Protection Program loan because of that. They didn't want to be scrutinized by the public and criticized for taking the money when perhaps they might have other sources available. And the big deal about the second extension of the Paycheck Protection Program loan is, this was phase 4. They added the agricultural business, which in the first go around was prohibited from applying for a Paycheck Protection Program loan. And this was in the legislation. Legislation stated that an agricultural enterprise defined in SBA Section 18B with no more than 500 employees is eligible to apply. I have no idea what an 18A or 18B Section B agricultural enterprise is. But I can Google as well as anybody else. Probably not as well, because I'm too old. But it is what it is. But I did find a definition under 18B. An agricultural enterprise included a small business engaged in the production of food and fiber, ranching, raising of livestock, aquaculture, and all other farming and agricultural related industries. And I can tell you somebody in the ag business, in the middle of Kansas, Iowa, Nebraska, Illinois, could probably get their Paycheck Protection Program loan in one day, because they're going to go to their local banker who's going to bend over backwards to help them get the money. So it is what it is. Now, on slide 46, most of this was done by this notice 2023. And this is the one that extended everything that was due between 4/1 to 7/15, extended everything to 7/15. And some of the questions that I've had on this. Well, what about the due date of the FBAR? Was that extended? Well, yeah, it was. Not directly, okay, but indirectly. And the original date of the FBAR, FinCEN 114, was 4/15/20. Well, you didn't file it on 4/15/20. It was automatically extended to 10/15/20. Now you could say it's automatically extended to 7/15. Well, it's automatically extended before. So I've had a couple questions on that. And they've extended your tax due and all estimated tax payments that were due in between 4/1 to 7/15 to 7/15/20. So you don't have to do anything. Automatically extend it. And on 7/15/20, I mentioned colleges, universities, high school, elementary schools. What are they going to do this fall? They don't really, they can say they're bringing the students back, but all you have to do is think of a German dormitory. And will they bring back colleges and universities? They will have to make that decision by about the middle of July. Most schools on a semester system start sometime in August. So they need to be able to notify their students. And that's created a lot of uncertainty. And if you're a college football fanatic, it's most of the schools will not have football unless they bring the students back. So we'll see what happens, and that's going to have a tremendous economic impact on all of those educational institutions. So and I don't know if that was by the 7/15. They might even move this date back from 7/15 to maybe 8/15, just depending upon what happens. So everything has been extended, and this is rhetoric on the bottom of slide 48 from the Internal Revenue Service Commissioner, Mr. Reddick, and he says, even with the filing deadline extended, we urge taxpayers who owed refunds to file as soon as possible. And you better file electronically because we don't have anybody working. And I think they started returning to work last week. I don't know what people they brought back this week, but they are so overloaded and so behind. And I know Commissioner was supposed to speak about third week in July at our Tax Institute. And I've got another couple days to decide on what I'm going to do with that. But it is kind of what it is. And come July, will you want to be sitting shoulder to shoulder with $400 to $500 of your closest friends? I don't think so. Penalties and interest. No penalties, no interest will accrue. And when I was preparing returns at the end of February, early March, the one that drove me nuts, I do returns for people in about 35 different states, was trying to figure out what each state had done. And all the 41 states which now have some sort of state income tax have extended their due dates. And I do returns for 2 or 3, 4 people in Hawaii. And I don't think they extended their due date until probably the 3rd or 4th week in March. And they originally extended that to 6/20. And I don't know why. The original due date was 4/20. I don't know why, rather than 4/15. Then they extended it to 6/20. Now it's been extended to 7/20. But most states, if they have a quarterly estimated tax payment, also extended their April 15th to July 15th. State of Hawaii didn't. They still had their first installment payment due 4/15 and their second installment payment due on June 15th. You might look at Appendix MM. That gives you kind of a rundown on what all the 41 states did with their extensions. And then over on slide 50, I picked this up on April 7th. There was a tax notes which I use for current developments. Had a letter to probably counsel, chief counsel, asking somebody who's a qualified intermediary, asked whether or not the identification period of 45 days and the replacement period of 180 days in a Starker exchange was extended. And it was just a letter. No official response yet from the service. And I mentioned Rev Proc 2018-58. I got that a couple slides down, and I'll show you what they did in that one. To get the extension, you didn't have to do anything. Everything was automatic. On the original go-around with the extension in Notice 2020-18, this was by way of limitation. They said only these forms were extended. When they extended this again in Notice 2020-23, they came up with the laundry list of forms, and you'll see what the laundry list of forms is. That was by way of illustration, not by way of limitation. So any return that was otherwise due from 4/1 to 7/15 automatically pushed back to 7/15. Also includes all 990s. Private foundations, 990Ts, due on May 15th. That was not extended. Now it has been extended to 7/15. Any type of partnership return or S corporation return with a due date between 4/1 to 7/15 has been extended. Somebody, when I did this the first time, asked me about, did this extend a Form 2350? And I'm saying to myself, when the person asked it, I don't even know what a 2350 is, but I can look it up afterwards. And the 2350 is for somebody that's outside the United States or inside the United States, where they're going to take the foreign earned income exclusion. So that has, if you had a, that's also been extended now by Notice 2020-23 to 7/15. Payroll and excise taxes, that was not extended. They are still due on the regular due dates. They originally did not extend the 706s and the 709s, which were due between 4/1 to 7/15. By 2023, they extended both of these. There was actually another notice, 2020-20, which extended the gift tax returns. 965H installments extended. The base erosion anti-abuse tax payment was extended. You don't have to do anything to extend. If you want an extension beyond July 15th, maybe August 15th, if they come up with another extension, you're either going to have to file a 4868 or a 7004. And I still have at least 120 tax returns, 1040s left to do. I extended all my business returns about the third week in February, which is what I always do, otherwise I'll forget about them. And probably by the end of this week, I'm going to send out the extensions for the rest of my 1040s. And I do about 500 returns a year. And I only do poor people's returns, a couple rich people, but, and somebody said, well, how can you file an extension unless you know they owe tax? Well, they ain't going to pay it, so I'll just zero it out so they owe nothing. And, well, that's not a valid extension. I know that. But they're probably not going to do anything. They always owe a little money. But it is what it is. Now, already filed, haven't paid, too late. Scheduled payment, if you're not paid, you got until July 15th. If you scheduled a payment, you had it up until April 13th to give it. State tax liabilities, most of that was extended. Now, I've had a couple questions on this. What happens if I had my refund for 2019 applied to my installments that I'm going to have to make for 2020? Can I get that refund back? And if you looked at this revenue ruling that I cite here, 77-329, if you successfully file another tax return by July 15th, that will replace the previously filed return. And supposedly, it's probably going to cause a glitch in the system, but that supposedly will get you back your refund. And then somebody else sent me an email, said, I was an eager beaver. I filed my tax return and 1st of March for somebody, and we made our first quarterly estimated tax payment by April 15th before they extended it. Can I get back my first quarterly estimated tax payment, which I paid either by check or electronic transfer? I know of no way that you can get it back. I know if you applied your refund to that, you can get it back. But if you made the actual estimated tax payment, it's gone, as far as I know. Now, the one that drove me nuts was my first quarter estimated tax payment was extended to July 15th. My second quarter's estimated tax payment was not extended originally. That was June 15th. And I'm saying, that's absolutely ridiculous. And, well, they just extend both of them. Well, they finally did. And now both of these are due on July 15th. And I do a return for somebody that's probably going to make an estimated tax payment of something like $120,000 or $180,000. So I guess he's a rich guy. But he's going to make estimated tax payments. I had him down for like $30,000 a quarter. Probably went, and I know this is not technically correct. What I did, I'm just going to split it in threes. I'm going to have my July 15 be 1/3 of the 120, 40,000. 915 be 40,000, 115 be $40,000. And he's an attorney, and he's not sure what the heck he's going to make this year. He's an attorney with a large law firm, and their revenues are down significantly. He's worried about cash flow. So that's the way I did it, and he always changes it anyway, depending upon the profitability of the firm. Now, one of the first questions I had, what's the drop dead date for funding my health savings account for last year? And what's the drop dead date for making my deductible, non-deductible, my Roth IRA contribution? The drop dead date is the due date of the tax return, not including extensions. So somebody sent me that right away, said, does this give me up until now, July 15th, to make my deductible, non-deductible contribution to an IRA? The answer to that is yes. And they answered that in this Notice 20-18. Same thing for a health savings account. If you got a family HSA, you have $3,400. I now have until July 15th, if I wanted to put in another $3,600. Somebody asked me that question. I'm waiting for a response. Not extended excess elective deferrals. Employer contributions to a qualified plan. And due date of the tax return, including extensions. Now, and I don't know what the answer to this one is. This was a question that somebody asked me very early on in the Paycheck Protection Program loan. And let's make the assumption, I'm trying to get a screen here, that it was probably an 1120S. I'm just making up a number. We had ordinary income of something like $200,000. We were going to make a contribution to a qualified plan. And I'm just coming up with the number for myself and my employees, whatever, of $90,000. Showing line 22 profit, line 21 profit on 1120S of $110,000. So this is the return that we're going to file for 12/31/19. And the contribution to the qualified plan of $90 is paid in 2020, maybe by 7/15, paid by 9/15. Is that considered as a payroll cost for 2019 if I haven't paid it by the end of the year? And in the Paycheck Protection Program loan, in one place they used incurred, and in another place they used paid. a lender was not going to allow this person to take into account as a payroll cost attributable to 2019 the unfunded payroll amount that, or the pension contribution that they were going to pay in 2020, which was then going to be deductible on the 2019 tax return. And he was arguing with the lender that the statute does not require me to pay it. And I said, you know, it's a losing cause, because when you apply for one of these Paycheck Protection Program loans, the lender has the absolute say over what they're going to allow you to do. And you agree as part of the application process not to argue with the lender. I guess you can make a case. I think it should be incurred and not paid. So we got the same problem with the 8 weeks on the Paycheck Protection Program. We'll come to it. HSAs, we talked about that. What they did, they extended the deadline for filing a claim for refund for 2016 from 4/15/20 to 7/15/20. So if you're due a refund on your 2016 tax return, you haven't filed a tax return, we're going to give you another 3 months to get that refund. And my reaction to this, I'm a cynic. Well, you haven't filed in 3 years. Why all of a sudden are you going to file to get your refund money? Cut it off at 4/15, and that was the end of it. So they extended that for another 3 months. That did not extend the statute of limitations for anything other than getting your refund. And I forget how many billions of dollars they have in refunds that people haven't filed a tax return to claim. You're forfeiting it if you don't do anything by 7/15. I was wrong on this one. 446, overpayment of estimated tax for C Corporation as quick refund. And I couldn't find anything in the original notice that said it was extended. Well, they extended my C Corporation return from 4/15 to 7/15. And I'm saying, so I got not extended. And I'm saying, that doesn't make any sense, because how am I going to get back my overpayment and my refund unless I've got a pretty good idea as to what my tax liability is? So I think that's been extended. Nothing for 2019. There was a news release which simply supported that notice. And then this notice is the one that extended everything from 4/1 to 7/15. And I've got a rhetorical question up in the right-hand corner. Does Notice 2020-23 apply to an individual who received a required minimum distribution in 2020? Does that give them up until 7/15 to roll their contributions over? Because I read an article. Somebody referred to this notice and said, if you receive a required minimum distribution between 2/1 and 5/15, you have until 7/15 to roll that over into another retirement plan. I can't find it, so I'll come back to that. So this is nothing new here. 4/1 to 7/15, postponement of due dates, specified time-sensitive action. The tax court even had to get in on an FAQ. They came out with an FAQ, which says if you are otherwise required to file a petition by 4/1, you now have until 7/15 to petition the tax court, or until the tax court later opens. And will that be postponed? Due dates with respect to government actions. They've got an additional 30 days. And I know the key IRS personnel, I think they returned to work the week of last week, whatever that week was. And there was somebody from the Ways and Means Committee who was criticizing the Internal Revenue Service because the Internal Revenue Service was not going to supply any face mask to their employees. They said, employees, you come back to work, you have to provide your own face mask, your personal protective equipment. And somebody was irate on the Ways and Means Committee and said, that's the least we can do with regards to the caretakers of our tax system. So I imagine that they probably did have to provide personal protective equipment. Like-kind exchanges and RevProc 2018-58. This RevProc here dealt with a federally declared disaster area. And federally declared disaster area, which I don't think the coronavirus has been designated as. But if it were a federally declared disaster area, hurricane, rain, flooding, something like that. And this RevProc came out in 2018. It's about 30 pages long. And section 17 of that RevProc deals with the identification period and the replacement period, the 45 days and the 180 days, and did extend that. Now, if this coronavirus pandemic goes beyond 7/15, probably what the IRS will do, Treasury, they will come out with the RevProc, very similar to the one that they came out with in 2018 for federally declared disaster areas, and go through and meticulously designate what the due date is for like-kind exchanges, your Starker exchanges, and some other time-sensitive due dates. So we're not there yet. That's kind of my inclination. Now, notice 2020-23, unlike 2020-18, is by way of illustration and not by way of limitation. I've actually had 2 or 3 emails, I think 3 emails, on the due date of an 8752. If you don't know what that is, you're not missing anything. That 8752 deals with an S corporation or partnership, which had adopted a 3-month or less deferral of income. There's a required payment based on the income that you're deferring from 10/1 to 12/31 of 19 to 2020, and it's 38%. That generally has a due date of May 15th. Does this notice 2020-23 extend that? Answer to that is yes, because it has a due date of anywhere between 4/1 to 7/15. The specific form is not mentioned in notice 2020-23. So I was looking for it, and my conclusion is based on reading this notice, that this is by way of illustration, not by way of limitation. And I said the due date of the 8752 is also July 15th. So you kind of flip. These are the forms that were mentioned and noticed, not exclusive. And if you flip over here, this is the one that extended the 1040 ES for the first and second quarter to July 15th. Same for a 1041 ES for an estate or trust. Now, then Service got in the act, and they came up with the People First Initiative program. And the commissioner said, we're out here dealing with this, and we want to make sure that we do everything to help our country. So what they did is, you can see, if you got an existing installment agreement, you don't have to pay it. Then, I don't know where I picked this up from, Appendix M from the Small Business Self-Employed Division, which said that they're going to suspend all collection activities from now to when they come back to work on 7/15. So it is what it is. If you got a new installment agreement and you don't have to make a payment until July 15th. If you got a pending OIC application, don't hold your breath. It probably won't be approved. We still want you to apply. If you've got an offer in compromise where you're required to make payments, you're not required to make any payment from 4/1 to 7/15. If you file your tax return on 7/15 rather than 4/15, you're not delinquent. We will process new applications whenever we come back to work. And then non-filers. I've never seen the federal government make such a concerted effort to see that every person that is entitled to their $1,200 or $2,400 or the $500 for their child gets that $1,200, that $2,400, or the $500. And they put in, and this is where we see kind of a daily guidance. And what I'm wondering, I've got a reference there to 2019 data book. The 2019 data book, which gives us the number of returns and statistics up through 9/30/18 or 9/30/19, is not out. The 2018 data book, which gave us the number of returns filed through 9/30/18, came out 2 months late. It generally comes out like March 28th, 29th, and I've been paying attention to this for a long time. Last year it came out on May 20th. Now, in 2008, if I went back and took a look, there were 158 million tax returns filed in 2008. In 2018, the number of tax returns that were filed were about 151 million to 152, maybe 3 million. So, and then 2008 is the largest, highest number of 1040s that have ever been filed in our history. And why did we have so many people crawling out of the woodwork back in 2008 filing a tax return? Anytime there's free money to be had, there's people crawling out of the woodwork. And in 2008, they gave 300, 600, 900, I think 1,200. I don't think it went above that. That's where the $1,200 comes from. To everybody that filed a tax return in 2008, that was 158 million. What I'm wondering is when next year's statistics come out, depending on when they do with the federal government's fiscal year ends on 9/30, regardless. And I'm wondering whether or not it's going to surpass the 158 million for 2008, just because of the federal government's encouragement that you get onto their website, that you file a dummy return. You do something to get your $1,200 or $2,400. So I'll come back to that. They suspended field collection, liens and levies, passport certification, private debt collection, in-person meetings, unique situations, I still don't want to meet with you. General request for information, earned income tax credit wage verification, independent office of appeals. We don't want to meet face-to-face with you. But we will vigorously defend anything that is close to the statute of limitations. Maybe. And the reason I say maybe is I call it the tax practitioner's hotline. They call it practitioner's priority service. And I haven't tried to call it, but had somebody a few sessions ago say they tried to call that practitioner's priority service. I should have put down the telephone number here. And it said they tried it probably half a dozen times at different times of the day, different times of the week, and there was nobody there to answer. And most of the IRS personnel, very strong union, they haven't been working because they don't have much space allocated to them, and they're almost shoulder to shoulder. And I don't think they're all going to come back until the pandemic scare kind of goes away. How do I use the non-filers? And this is where they encouraged everybody to go on to their website. If you always owe tax, they don't have your bank information. You can enter that to determine whether you could enter your direct deposit so that they can get you the $1,200 to $2,400. That's $500 for each child. Okay, so it is what it is. I'm not worried about this. And May 13th was or is the drop dead date for going on to their website and still have the possibility of getting a $1,200 direct deposit into your bank account. I know they started mailing out checks the week of April 13th. I think the paper checks went out, some of them went out the following week, and so that's the end of that. Now, this one here, high deductible health plan. It's free COVID-19 testing. Will not violate or jeopardize your high deductible health plan. The problem is they haven't tested that many people in the U.S. And it's only when they come up with the vaccine will we have the freedom that we used to have. This is the one that originally extended the due date of 7/09. It was subsequently extended again, and that notice 2020-23. Waiver of penalty for payroll deposits. Because of the Emergency Paid Sick Leave Act, the Emergency Family Medical Leave Act, $2,000 credit, the $10,000 credit, the retention credit, the 50% of the first $10,000 of wages that I paid to everybody is extended. So this notice, it just deals with the waiver of the penalty for payroll deposits. They didn't extend the time due date of those. And then I'll flip over here to Rev Proc 2020. This deals with a foreign person who is stuck in the United States, very fact specific, does not become a non-resident alien by under the substantial presence test because they're stuck here and they can't get a flight home. So they're not subject to U.S. tax. And this pays, pick any 60 days. On or after February 1st and on or before April 1st, where you were stuck here so that you're not physically present in the United States more than 180 days or whatever the time limit is. And then this one over here, Rev Proc 2020-27, is that if you were assigned abroad and you would have been entitled to the foreign earned income exclusion, you came home early because of the coronavirus pandemic, you will still be entitled to the foreign earned income exclusion if you would have otherwise qualified, but for the fact that you came home to avoid the pandemic. This one, we're going to encourage everybody to file a return. Well, one, you could do it by the website, and I don't know if they're going to count that as a return. Or what you could do in this one is to file, I call it a dummy return. You could electronically file a dummy return so that they've got your information on file so that you can get your $1,200, $2,400. And I know there's some special entries that you have to make if you electronically file by this, that you got to put $1 in interest, $1 in dividends, so that they know that you're filing a dummy return for the sole purpose of getting the $1,200 or the $2,400. This one is pretty fact specific. Deals with requesting a private letter ruling, closing agreement, or submitting something to the chief counsel. We will allow you to fax or email your request. You can fax in 1139 at 1045 if you want to carry back your NOLs. And I'll show you what the time limit is on that one. So I did that, done that. I'm going to stop for about 3 to 5 minutes. But before I stop, it's no questions. you might note that legislation has been introduced to allow a deduction for Paycheck Protection Program loans that are later forgiven. Congressperson Lizzie Fletcher, Democrat from Texas, evidently introduced legislation last week. This notice, 2020-32, is the one that denies an expense. Tell me how that applies to a Schedule C person. And then I've got this one here in the box. I've got 4 employees, average monthly compensation is $40,000. I get a Paycheck Protection Program loan of $100,000. I fire or lay off 300 my employees. I tell them to go collect unemployment. I'm one of the 4 employees. I pay myself $75,000 in payroll in the 8-week period of time. I rehire my 3 employees. Whenever the economy comes back, if that's July 1st or if that's August 1st, I might rehire you. How much of my Paycheck Protection Program loan will be forgiven in this case? Answer is slightly more than $5,000. How did I get there? I'll show you. And then I wrote this one in this morning. I've got 5 employees. We all make about $8,000 per month in payroll cost. Whatever payroll cost is, average $8,000 a month, $40,000 for the 5 of us. So our average monthly compensation is $40,000. We get a Paycheck Protection Program loan of $100,000. How much of that Paycheck Protection Program loan will be forgiven at the end of the 8 weeks? The answer to that is $98,462. But how the heck does that work? You take $40,000 average monthly amount. You're going to have to do this for every employee. And people today aren't worried about applying for the Paycheck Protection Program loan. Now they're concerned about how much that loan at the end of 8 weeks is going to be forgiven. You're going to take their average monthly compensation, multiply it by 12, divide it by 52, and multiply that by 8. And whatever that number is, 73,846, you're going to divide by 0.75. The devil's in the detail. And a lot of these people, myself included, that thought I was going to get the entire amount of the loan forgiven. It ain't going to be forgiven. It's just kind of the way it is. So you're either going to have an outstanding loan amount or you're going to pay it back plus the accrued interest. So let me give you a small break. Very small, by the way. I'm not going anyplace. So I'll stop for about 3 minutes or so. Hit by the bad side yet. And this is a specific statement on the internet. Even though it sounds like you are. When they came out with this notice, Congress was very upset. payroll expenses, their rent, utilities, in order to, even though it sounds like you are liable. You know, and if you can spend this money on payroll cost, utilities, group health care benefits, some other items, at the end of the 8 weeks is treated number if you're a return preparer, if you run an accounting firm, you have a number of small businesses. What's going to happen to a number of those small businesses? And the answer is they're going to file for bankruptcy, probably beginning in less than a month. They ain't going to be around, and then see what happens to your work. And the guy said, I'm a sole proprietor. I said, maximum amount that you got as a loan is probably a little over $20,000. My personal response, you don't have to like it. Take the money and run. And because of the economic uncertainty, you don't know if you have other sources of liquidity to survive your ongoing operations. I'm not like a big business or a publicly traded business where I can issue additional shares of stock. I don't know what's going to happen. I can't predict what's going to happen in the future. Small business person, which includes all self-employed, is entitled to borrow up to 2.5 times their monthly payroll cost. Well, the devil's what's in the monthly payroll cost. Then the debt is forgiven if at the end of the 8 weeks the money is used for payroll, rent, utilities, interest, and there ain't much more that you can use. And the covered period is the 8-week period beginning on the date of the disbursement of the Paycheck Protection Program loan. If the money was dispersed yesterday, that is day number 1 in your 56-week or your 56-day computation. So, and we'll get to that. Now, so every small business person, I think, should apply. And even though it seems like you're signing as you're personally and severally liable for the debt is non-recourse debt. And what I thought of this, it's this amount is treated as non-recourse debt. If your business fails, you are not personally liable. And what I think of on this, you don't have to agree with me, I don't care. I think of a Schedule K-1 from a 1065, line item K, where it says non-recourse debt, qualified non-recourse financing, and recourse debt. If you prepare a 1065, where do you list the debt? And I can tell you right now, this is one of the most often seen mistakes that I see on a 1065. They put the debt as non-recourse. It ain't non-recourse. Most, if not all, of the debt of all LLCs, most or all of the debt goes there. Qualified non-recourse financing is non-recourse debt secured by real property. You might have a little of that. Virtually none. You don't have to believe me. You can do what you want. None of the debt is straight up non-recourse debt. I can give you specific examples, but I cannot give you an everyday example of straight up non-recourse debt. I don't care what you come up and what argument that you make, you are wrong. And a Paycheck Protection Program loan, however, is the everyday example So if you borrow this money, it's not forgiven. The debt's going to go on the books as a non-recourse debt. That if the business fails, you're not liable for the amount, even though it sounds like you are liable. You know, and if you can spend this money on payroll cost, utilities, group health care benefits, some other items, at the end of the 8-week period of time, the payroll loan is discharged. And I was thinking, okay, it's discharged. Now do you have cancellation of indebtedness income? I say, okay, you borrow $100,000. Loan is forgiven. Do you have COD income? I said, okay, I get the 100. It's discharged. The tax rate is about 30%. Now I got tax of $30,000. So maybe that's not a bad idea, a small price to pay. And the Act specifically states that when the debt is discharged, there is no COD income. I'm saying this has to be the best illustration that I can think of free money. I get the money, I spend it, I do the right thing, and the debt is discharged. And then I was thinking, does Section 265 disallow a deduction for the expenses paid from the Paycheck Protection Program loan? And the question is, and this is based on this private letter ruling, did the taxpayer incur their payroll expenses, their rent, utilities, in order to receive the Paycheck Protection Program loan? Answer to that is no. And I said, can't possibly apply. I mentioned this notice 2020-32, and they use as their major support this revenue. And if I'm a vet and I go to school on the GI Bill, the monies that I receive for the GI Bill are tax-free. I don't have to pay tax on it. That's the right thing to do. Now, what about somebody who has deductible education expenses? So I'm a self-employed person. What I want to do is use my GI Bill. So what I do is I go out, incur some educational expenses to receive the GI Bill. Can I deduct my education expenses? And this goes back to a time when an employee used to be entitled to deduct their unreimbursed out-of-pocket employee business expenses. Did you incur the expense to receive the GI Bill? Answer is yes. Therefore, you shouldn't be entitled to deduct your education expenses. Now, this notice, 2020-32, which was released on April 28th, came out Thursday afternoon. And as I recall, I think it was Thursday, whatever day it was at the end of the day, my time. And it basically says that any expenses that you pay from the Paycheck Protection Program loan, which is forgiven, are not deductible because Section 265 apply. And the Secretary of Treasury came out, Mnuchin, said, I agree 100% with that. Well, Mnuchin, now no disrespect, you don't know anything about tax. And I don't agree with that. And they picked up this idea from a bunch of people that were kind of writing on the internet, adding whether or not Section 265 applies. And I think this notice is wrong. And I flip over here. And what this does is it disallows an expense for any expenses paid from that Paycheck Protection Program loan. And what on slide 132, the thing that I thought of immediately, and I got to deal with owner compensation replacement. How the heck does this disallowance of the expense apply to a Schedule C person who has no employees, I get my $20,000 in loan, and what I do is I close the doors of my business for the next 8 weeks, and I don't want to fly anyplace. So I just go fishing and go to Montana, go to Canada, maybe I'll drive up to Alaska to go fishing. And I do nothing. How the heck does this apply in that situation? It leaves that out of it because they didn't think of it. Now, when they came out with this notice, Congress was very upset. Person in charge of the Senate Finance Committee, Mr. Grassley, said that was never our intent. And because if you're going to deny me a deduction for the expenses that I pay from that $100,000, that's the same thing as saying you've got COD income. So in phase 5 of the legislation, when they come up with the next go-around, whatever that's going to be, they will come up with a provision which says if your Paycheck Protection Program loan is forgiven, you will be entitled to deduct the expenses paid. And what I've got here, I got a question here in just a second, and is over on slide 134. Is if you went back and looked at Appendix HH, and I picked this up way before they came out with 265, the disallowance. Nobody mentions this. This is an FAQ on payroll support for air carriers and contractors. The $32 billion that they're going to give to the airlines, so and hope that they don't go under. And this is a specific statement that if you comply with the payroll support requirements, the grant received is not taxable and the expenses incurred are not deductible. Well, you're giving this to the big airline industries. That's the same as the Paycheck Protection Program. You're giving them a grant. You're saying it's not taxable to them, and they get a business expense deduction for all the expenses paid. You're giving that to the big people. What about the everyday business person? You're going to deny them a deduction? That's why I think it's wrong. And plus, did I incur the expense to receive the Paycheck Protection Program? Answer to that is no. Question here. Small business client has received a Paycheck Protection Program loan and is hesitant to use the money, thinking they should return it before May 14th. Do not return it. And I don't care what kind of small business you are. This is me. Person has a conscience, which is good. I don't have a conscience, so I'm just going to spend the money. And I'm a cynic. I would tell the person, you don't know what's going to happen to your business. You might be busy now. What's going to happen in 3 to 6 months? Will you have to invade? Do you have enough income coming in on a day-to-day basis to cover your expenses and maybe make a little profit? Because the purpose of the Paycheck Protection Program loan is to keep your employees employed. You might have to cut some, and we'll talk about that, you might have to reduce the salaries. But you're trying to survive. And this almost, to me, it's like somebody receiving $1,200 or $2,400. How many people that got $1,200 or $2,400 think that they have to return it? Nobody does, except maybe people with a conscience. So we'll talk about that. My reaction is they gave it to you, you did so in good faith, and I don't know what you mean by small business. And could they go, if business simply stopped, what would they have to do if they had no customers? Would they need this to survive? And based on what they did here, they thought the economy, I don't think they thought, they were hoping that the economy would somewhat recover itself by June 30th. Well, I haven't been hit by the bad side yet, but the bad side is coming. So, and it's very, you know, it's very nebulous as to what's happening. Now, why did the SBA come out with FAQ number 31? Because Chase gave Ruth Chris $20 million, Shake Shack $10 million. Chase also gave the Los Angeles Lakers $4.76 million. And that's when it came out. And that's where they gave us a repayment up until it was originally May 7th. Now they extended it to May 14th. And number of large public companies received the loans. And Wells Fargo, and I don't know if they're still being sued, was being sued by a small business in California because Wells Fargo, like Chase, gave away the money to their, I call them their buddies, their big businesses. Would you rather make one $10 million loan, or would you prefer to make $10,000, $1,000, or whatever, $10,000 loans? A lot of work with the 10,000 small loans. And I'm going to get paid the same whether it's large or small. You get a percentage of the gross. And economies of scale, I'm going to make one large loan because I get paid the same as if I made 10,000 loans. So why not, you know, make best use of your resources? So they were criticized. So they had supposedly other sources of funding. And because they could have issued additional shares of stock, I guess. And if you're not eligible for the Paycheck Protection Program loan, do the math and see what would happen if you got the retention credit. I'm going to tell you that generally, you're always better off with the Paycheck Protection Program loan. But you have if you got a conscience, you don't want it, you don't think you need it, pay it back by May 14th. And my reaction, I would repay it. But I don't know what's going to happen in the future. You don't know. And you did this in good faith. The SBA did announce that they will audit everybody that received a loan of $2 million or more. And I don't know how many lenders or how many borrowers that would be. We had also economic injury disaster loans. This was the max of $2 million to kind of fund your operations. And somebody asked me, could I get an economic injury disaster loan and also take the retention credit? The answer to that is yes. Now, if you looked at Appendix N, I know very little about the SBA loans. But there's a guide at Appendix N which gives you the options which are available for an economic injury disaster loan. So, max of $2 million. I think the interest rate is 3.75, and they're up to 10-year loans. Areas eligible for one of these disaster loans: every business in the continental United States is eligible, and territories as well. Then they had an economic injury disaster advance. Now, it's my understanding that if you want an advance, you have to apply for a regular economic injury disaster loan. And the SBA a couple weeks ago announced that they would give an advance of $1,000 for each employee, up to $10,000. This money does not have to be repaid. Is that economic injury disaster loan advance taxable? I tried to find an answer, and I can't find an answer. All I can tell you, to me, this is like money from FEMA, which I know is not taxable. and I know that the SBA will not issue you a 1099 saying that we forgave this $10,000 advance. And I tried to find an answer to this. I know the state of Hawaii is saying that the economic injury disaster loan advance is taxable for both federal income tax purposes and for state income tax purposes. And I can't find any place that definitely says it is taxable. So if you know what the answer is, send me an email. And you better give me a cite. You just can't say it is taxable. Now, there's debt relief for certain loans. There's express bridge loans. If you got a relationship with the SBA, it's supposed to be quick turnaround. And I know somebody applied for one of these back in March, and it was April, and they still hadn't received their bridge loan of $25,000. And because the SBA has been inundated with loans. Now, if on slide 143, this deals with the SBA Paycheck Protection Program loan, the application process. Appendix K, L, AA, OOPPR, and then double T is I've actually reproduced that notice for you. So you want to look at that, that's great. Just push Control F and you can do a word search and you can find whatever you're looking for in that document. And originally, you don't have to agree with me on this. If you were applying for one of these Paycheck Protection Program loans, it was a lot easier to apply if you used a payroll service such as ADP or Paychecks. They broke out everything for you. They handled the health insurance, they broke that out. If they handled the pension contribution, they also broke that out. If you do payroll, you had to come up with the figures for your client. And that's pain in the backside. So you came up with the figures. You do payroll. Now you're going to have to come up with the figures that you're going to have to submit for the loan forgiveness. And the devil's in the detail. Now, on slide 144, you cannot do both a retention credit and a Paycheck Protection Program loan. You can do an Emergency Family Medical Leave Act, Emergency Paid Sick Leave Act, and the Paycheck Protection Program loan. But the wages that you pay under the Emergency Family Medical Leave Act, the Emergency Paid Sick Leave Act, are not wages paid for purposes of the Paycheck Protection Program loan. You may defer your employer's share of the 6.2% of the Social Security tax until the Paycheck Protection Program loan is forgiven. Now, this was on a first-come, first-served basis. And I read something this morning that 7 people have been arrested so far for fraud on this. Whenever there's free money to be had, there's people crawling out of the woodwork. They ran out of money in 12 or 13 days in the first go-around, and there might be a little bit left of the $310 billion. And I know they gave half of it away by May 1st. I'm going to guess that they should be out of money as of today. So I don't really care about the application process. And what is included, whatever, payroll cost, not payments to independent contractors, whatever. Now, what are payroll costs? And I'm going to say it's probably the greater of your box 3 or box 5 wages, limited to $100,000. Then somebody asked me about a shareholder and an S corp. What do I do with the health insurance premiums that the S corporation pays on behalf of the shareholder of the S corporation? Those are not group health insurance plans, payments. They are considered as box 1 wages. Taken into account for payroll costs, limited to $100,000, whatever that means. But when you take a deduction on your Schedule C, I'm sorry, not on my Schedule C, on Schedule 1, line 14, 15, and 16, 1/2 my self-employment tax, my pension contribution, and my health insurance. Those are not payroll costs. So somebody asked me about guaranteed payments. I'll come to that. But payroll cost, that's a payroll cost. Group health care, group retirement benefits, and state and local taxes assessed on compensation of employees. Somebody asked me this morning, does that include my workman's compensation? And I don't have the foggiest idea. I know they don't make reference to it in any of the SBA guidance. So I'm going to guess it is probably not considered as a payroll cost. My wages, gross wages, retirement contributions that the employer makes on behalf of the employee, health insurance payments to a group health plan, which are excluded from the employee's gross income under 106, and any payment of state and local taxes assessed on compensation. I don't know if that includes workman's compensation. It doesn't seem that it does, and I'm not sure on that because I don't know. The Act expressly excludes the following: compensation of employee in excess of $100,000, prorated as necessary. If you do the payroll service, or if you do payroll, you had to make the calculation. If I used the payroll service, they did the calculation for me. So it is what it is. And I can tell you that taxes paid under Chapter 21, 22, and 24 are not taken into account. This is the direct quote from probably Appendix L. Federal employment taxes imposed or withheld between February 15th and June 30th, including the employer and the employer share of FICA, as well as the Medicare tax, are not taken into account. So employer costs do not include the employer share of FICA, the employer share of Medicare. Wages includes the employee share. Gross wages, then they subtract it out. We already talked about Emergency Paid Sick Leave Act, Emergency Family Medical Leave Act. And so phase 4 was April 7th. My best guess is if they're not out of money, they're about out of money. Now, originally there was no guidance on how you treated a self-employed person or a partner in a partnership. And this is where they came up with owner compensation replacement. And that's all based on 2019 tax return. And I know somebody, my business account is with Wells Fargo, and I wasn't too confident that I was going to get a Paycheck Protection Program loan through Wells Fargo. So I called somebody I know at another bank, and I said, can I apply through your bank? I said, I got some money in there. And the person said, no, we will not accept a Paycheck Protection Program loan from anybody that we don't otherwise have a business account with. And a number of other banks did accept a loan application, but it was like going through an original loan. If the lender already handled your business stuff, they knew what your ins and outs were, and it was easier to apply. Now, and then somebody asked me a question. For the less than 500 you count every head, full-time and part-time. Then somebody said, well, geez, I read on the internet that if I have an Airbnb, I can apply for a Paycheck Protection Program loan. Well, I said, that's great. And Airbnb, all you have to do is think about this. With regards to a client that has a bed and breakfast versus a client that has a vacation home where they rent that on a short-term basis. Why do you put the bed and breakfast on a Schedule C and the vacation home on a Schedule E? Real simple. Income from the rental, a real property, is never SC income unless you provide significant services. Bed and breakfast, what significant services do you provide? The crummy breakfast, the daily maid service. Vacation home, short term, at one of these resort areas. It's, what do you provide a crummy breakfast? No. Do you provide, in most cases, daily maid services? No. It goes on the Schedule E. Airbnb, you have a profit of $60,000. Would you put it on Schedule C or would you put it on Schedule E? And don't tell me you did a lot of research, because there's nothing out official by the Internal Revenue Service on this. If you were to ask me, I would put it on a Schedule E. No significant services, no crummy breakfast, no daily maid services. You put it on a Schedule C, great, you paid self-employment tax. Go out and get a Paycheck Protection Program loan. You want to pay self-employment tax on 60? God love you. So it is what it is. And you don't have to agree with me. I'm just telling you, giving my 2 cents worth. Now, what do I need to apply? If you didn't apply, you're probably out of luck. What do I need to include in my application? How long will this last? I don't have to look for other services. How many loans can I take out? I remember somebody sent me an email very early on and said, I'm going to apply as a Schedule C person with my employees on April 3rd. And then I'm going to apply on April 10th as a self-employed person. I said, you can't do that. You only get one loan. It's, what are payroll costs? Payroll costs including benefits, retirement benefits, health care benefits, and state and local, I call it head tax or state unemployment tax. Interest on mortgage obligations, rent, utilities, all had to be enforced on February 15th. What counts as a payroll cost? This is Appendix K, page 10 and 11, and payroll cost. Salaries and wages capped at 100, employee benefits, which are group health insurance, payment of retirement, state and local taxes assessed on compensation, unemployment compensation. I don't think it includes workman's compensation, although I don't know for sure. And we'll talk about, so go back and look at Appendix K, 10 and 11. I'm going to take these questions. How large can my loan be? That's great. For the $100,000 cap, it's only cash wages. The other amounts that you pay on behalf of that person, defined contribution amounts, health care, and state and local taxes are not taken into account. How much of my loan will be forgiven? I think this is where a bunch of people are going to be caught by surprise. Now, do you have an example of a economic injury disaster loan grant and a Paycheck Protection Program loan forgiveness? I'm going to get to that in just a second. And I got people that have sent me this stuff. Is a reimbursement through a Section 105 healthcare reimbursement plan included in compensation with regards to the Paycheck Protection Program loan? So what you do is you have a health reimbursement account in effect. And where if you reimburse somebody, it's not considered as box 1, 3, and 5 wages. Is that taken into account? I can't tell you. Now, you make the determination here, and I'm going to guess on this one. Now, that's a great question. And I had a bunch of questions on this. It says payments to a group health care plan, which is excluded from the employee's gross income. Instead, I've got a health reimbursement arrangement to my employees. Is that taken into account? Well, it's not taxable. And I would say is that an insurance premium? Or are you, and the answer probably is no, but you're reimbursing them for the cost of insurance, which I think I would argue has the same effect. Who's going to make that determination? The lender's going to make that determination. So I'd probably throw it in, list it as a health reimbursement arrangement, because you're kind of self-funding your health plan, and to me that should be taken into account. A lot of these things, they just haven't come up yet. And as people apply for the loan forgiveness, that's when we're going to see some of these questions answered. Now, what you're going to have to do for each employee, if you pay them on an hourly or monthly basis, take their monthly pay, multiply that by 12, divide it by 52 weeks, and multiply it by 8 weeks. And you're going to be in for a surprise. And the entire amount of the loan will not be forgiven. And the max that you can pay in 8 weeks, $100,000 divided by 52 times 8 equals $15,385. I should have put here, that's the maximum amount of cash paid to any employee or owner that can be taken into account over an 8-week period of time. If I'm the owner, I can't, unless I'm an S corp, I can't add any of my health insurance, any of my pension contribution. And if I'm a self-employed or partner in a partnership, if I'm a shareholder in an S corporation, I can take into account my health insurance as box 1 wages, but that's going to be limited to the 100. So if I'm already at 100, it's going to be $15,835 in 8 weeks. My pension contribution could be added to that. And that goes back to the paid or incurred. Now, this is what's going to catch some people. And there's a reduction in staff. There's a reduction for a reduction in staff. There's a reduction if there's a reduction in somebody's wages by at least 37.5%. And there's a savings clause. The savings clause is June 30th. How does that work? Now, you don't have COD income. Right now, the official position is no deduction for the expenses. Interest rate 1%. The loan is forgiven. All the accrued interest as well as loan amount is forgiven. The unforgiven amount is due in 2 years. Can I pay my loan earlier? Yeah. Do I need to personal guarantee it? It looks like you are, but you're really not. And I've got, if in doubt, apply for the Paycheck Protection Program loan. It also says any information provided to you by the payroll service or by a professional or employer organization will be accepted as documentation by the lender as far as how much of this loan shall be forgiven. These are the details when you applied as far as documentation attestations that you were making. And the lender is the one that makes the absolute determination as to how much of a loan you're going to be entitled to receive. And somebody asked me this question, is if I got a client that came in and applied for a loan and said he needed a dummy copy of a Schedule C, and the client said, on the Schedule C, I wanted you to submit my Schedule C showing a gross of 100, expenses, I just come up with a number, of $40,000, with a line 31 profit of 60. That gives me an average monthly compensation of $5,000. And if I'm just a sole proprietor, self-employed, no employees, the loan amount that I might get is $5,000 per month times 2.5, which would be $12,500. And I want you to dummy up a Schedule C. Or what they wanted you to put was $90,000 as gross, no expenses, a line 31 profit of 90. If you submitted that to the SBA to prove their profit, or to the lender, and the lender up to the SBA, if you submitted that on behalf of your client, what would you tell them when you complete the 1040? My response to them would be, whatever number you submit on the Schedule C to document this Paycheck Protection Program loan, if you're a tax return preparer, you have the ethical duty responsibility to make sure that the same number appears on the Schedule C that you ultimately file with the Internal Revenue Service on the 1040. And I got in trouble on this one. Somebody sent me an email and said my client, a realtor, wanted me to put down $90,000 of gross receipts with no expenses. Can I do that? Yeah, you can. And kind of what this got me in trouble on. Have you ever seen a Schedule C without any expenses? I've been doing this a long time. I've never seen a Schedule C without any expenses. And then a participant in an email. This is not me. Participant in an email sent me an email. Said if you Googled presidential tax returns, you would see Miss Elizabeth Warren with a Schedule C of whatever income with no expenses. And I made the comment that I've never seen it. Then somebody said, you were defaming Miss, sent me an email and said, you intentionally defamed Miss Elizabeth Warren because you're a dummy. Didn't you know that she had rents and royalties? Or rents, not rents. She had royalties from the books that she wrote on her Schedule C, which is on the presidential candidate list. She has a Schedule C evidently with income and no expenses. And I commented back, I said, I do a couple tax returns for some noted authors. They receive royalties on their books. They always have expenses on their book. I've never seen it. So I'm not trying to defame anybody or do anything like that. That wasn't for me. I've just never seen it. But I'd tell the person, you submit that, want me to submit that for you? I'll go ahead and do it. But that's the same doggone return that we're going to file with the Internal Revenue Service. And if you don't like that, don't ask me to do this for you. And I'm not going to get involved in a conspiracy to defraud the federal government just so that you can get your Paycheck Protection Program loan. So it is what it is now. So the lender determines whatever this was the original application that the SBA came out with, and it was kind of confusing. Can I take into account amounts that I pay to somebody on a 1099 miscellaneous with a box 7 check this last year? Next year in 2020, it's going to be a non-employee compensation. Answer to that is no, those are not payroll costs. Well, why they got the 1099 miscellaneouses? Because they didn't know what they were doing. This is a bad example from Compass Bank, because I called Compass Bank. And I asked them if I could apply through their bank. They said no. And so somebody sent me a copy of what Compass Bank's application was. And originally it made no sense. But if you went back and looked at it, it makes a little more sense now. Now, if you're worried about a self-employed person, partner in a partnership, see Appendix A, which provided guidance for a self-employed person and a partner in a partnership in applying for a Paycheck Protection Program loan. They said owner compensation replacement. You are eligible if you are an operation, you are an individual with self-employed income, your principal place of residence, United States, you filed or will file a Schedule C for 2019. Then they said if you are a member of an LLC, a partner in a partnership, it's more with employees or without, Schedule C with their employees or without. It's more appropriate for the partnership to apply for the loan than it is for each individual partner to apply for the loan, because the expenses are incurred by the partnership. So, and they talk about owner compensation replacement. Now, Appendix O. Now, this makes no sense to me. If I'm a Schedule C person with line 31 of 90, my average monthly compensation, my arithmetic is working today, is $7,500 a month. Then they said, however, if you get a K-1 from a 1065 and you've got SE income of $90,000, you take that, multiply it by 92.35%, and use that to determine your average monthly compensation. I know we're the 92.35% because they're saying your share as an employer, so to speak, of your 6.2 plus your 1.45% is not taken into account. And the inconsistency is they don't require that of a self-employed person. They require that of a partner in a partnership. That's in Appendix O. It makes no sense to me. So it is what it is. Now, if I've got no employees, my Schedule C profit on line 31 for 2019 was $96,000. Divide that by 12, gives me an average monthly compensation of $8,000. I'm kind of rounding here. I multiply that by 2.5, and I will get a Paycheck Protection loan of $20,000. I got some rounding errors here. Now, so I get this Paycheck Protection loan, $20,000. I close my doors for 8 weeks. and I go fishing. Take a vacation. And I didn't do this last Sunday, but I had somebody in my office. They got a nonstop from Denver to Honolulu. I said, find out how many people are leaving this next Sunday on a plane from Denver to Honolulu. And person told me that there were 21 people that were supposed to fly from Denver to Honolulu on a plane that sat probably 230 people. And they weren't flying the big planes over there, too expensive. And right now, Hawaii is shut down through the end of May. And if you travel there, you have to go into a quarantine for 14 days. So you ain't going to take a vacation there. So I'm going to close the doors for 8 weeks because nobody's coming in anyway. And I'm going to go fishing someplace. I don't generate anything. I don't pay myself any money. What can I have the loan forgiven? And I know it works out a little bit different than my number here. What you're supposed to do, your owner compensation replacement is based on what you did in 2019. You take your 2019 amount, $96,000, divide that by 52 weeks, multiply that by 8, and let's assume, I know it doesn't come out to this number, let's assume that that equals $15,000. Now, take that 15,000 divided by 75. That's a loan amount of 20. Did you spend at least 75% of your Paycheck Protection Program loan on payroll cost? Your owner compensation replacement is, for that 8-week period of time, is based on your 2019 tax return. Now, all I have to do is come up with rent, utilities, interest payments for an 8-week period of time of $5,000, and my Paycheck Protection Program loan is forgiven. I don't have to generate any income in this 8 weeks because it's all based on what happened to me in 2019. It's the same with the partner in a partnership. If your SE income was $120,000, 92.35%, you'd still be in excess of 100. You take the 100,000, divided by 52, multiply by 8, you get $15,385. That is the amount that you are considered to have paid yourself in 2020. I didn't make the rules up. Can I come up with another $5,000 in rent, utilities, and interest? If I can, bingo, it's gone. Now, if my loan is discharged, $20,000, how do I apply that notice 2020-32 to disallow my expenses? Well, you can disallow $5,000 of expenses. What about the other $15,000 attributed to my salary? Do you say I have to pick up income of $15,000 to disallow the deduction, which I don't have this year, because I don't have to generate any income this year? It's all based on what happened in 2019. I don't know if that makes any sense. But that's what they tell you to do. Now, here's the confusing part. If I have no employees, I take line 31, 96,000, divide that by 12, average monthly compensation is 8, multiply that by 2.5, $20,000. Now, step 4. Add the outstanding amount of any economic injury disaster loan made between January 31st in 2020 that you seek to refinance less the amount of any advance that you received. And let's put down that this person received an economic injury disaster loan advance of $9,000. I don't know if this makes any sense. I received this economic injury disaster loan grant in the Paycheck Protection Program loan. I think, Angela, you're referring to the $10,000 advance. To get an advance, you had to apply, evidently, for an economic injury disaster loan that you're trying to refinance. Now, I didn't get one. I applied for it. That's zero. But I got an advance of $9,000. What is step 4? Add the outstanding amount. I don't like the way this is worded. Of any economic injury disaster loan, less the amount of the advance. How much of that advance do I subtract from the $20,000? I think that's your question. The answer to that is 0. They should have said add the sum of the amount of the economic injury disaster loan less the advance. If the actual loan is 0, then what's step 4? Step 4 is 0. And somebody sent me an email last night on the same thing. I said, if you took the class, go back to Appendix AA, gave them the page number, look at step 4. If you didn't get the actual economic injury disaster loan regular application, but you did get an advance, and I guess that was possible, you subtract out 0. And I don't know if that answers your question. So, can you please review this? Went too fast. And SEP contribution, okay. Now, a SEP contribution and a health insurance for an S Corp. Now, I need some help here. Now, let me go back here. And this is where some of the S corporations, they wish they would have paid themselves a little bit more in salary. So I'm a shareholder of an 1120S. I own 100%. And what I do, my wages, $5,000 per month, $60,000. So right now, that's box 1, 3, and 5 wages at 60. Let's assume the S corporation pays my health insurance premium on my behalf. So the S corp pays health insurance on my behalf of $2,000 per month. You're going to say that that $2,000 per month is box 1 wages, not box 3 and 5. So right now I've got box 1 wages of $84,000. Box 3 of 60. And box 5 of 60. So box 1 exceeds box 3 and 5. And then let's make the assumption that the S corporation also pays $15,000, and actually could be a little bit more. $15,000 to my pension plan, and this is one where I might be screwing up. I want to say my SEPIRA. So, paid on my behalf, $15,000. Now, what's my average monthly compensation? Answer to that, this is me. It would be the $60,000 in wages, plus the $24,000 of health insurance amounts, plus whatever, let's call that $1,200 plus, because I'm going to prorate that. I think I'm going to prorate that on a month-to-month basis, and a little bit more than $1,200. So take the entire $15,000 plus the 15, and that will equal $99,000 of payroll cost. I might be pretty close to 100 once I add in my unemployment compensation and other things. But then I take the $99,000 of payroll cost, divide it by 12, and we'll call that about $8,200, give or take. $8,200 a month. And what's my Paycheck Protection Program loan? 2.5% of that, or 2.5% of that, about $20,000. And then that's on an S corp. Then for 2020, during the 8-week period of time, I got to look at the compensation that I paid myself in 2020. I don't know if that answers your question. So that's the best I can do for a shareholder of an S corp. And if I didn't ask, send me another email. Would you say yes to the Paycheck Protection Program, where the application for $64,000 is in JP Morgan Chase, now ready for the e-signature by an S corporation medical practice with 6 employees and annual revenue of $620. Corporation has no debt, no line of credit, very little cash on hand, but a sole practitioner with deep pockets. The only source of current revenue is telemedicine related to script renewals. Would I take the $64,000 and run? The answer to that is yes. I have a neighbor who's a doctor, and he went back to work a couple of weeks ago, beginning of May, when they started to open up the medical practice. They're still limiting that. He said he had 3 months of no pay. And I don't care if you got deep pockets. I don't think I have to use my own funding to pay my employees. The whole idea behind this, to me, is the business, by generating revenue, the business has on hand, not a line of credit, but has the cash and liquidity necessary to sustain the business operations through the end of the year. And if this thing kind of reoccurs, what's going to happen? They're going to shut everything down. And you're going to go back. What are you going to do to your employees? And there's a June 30th deadline. And after that, bingo, they're going to have to probably do something more. So I'd take the money. Sign it, go with it. Is a Schedule F treated the same as a Schedule C for a Paycheck Protection Program loan? That's a good question. Schedule F, same as the Schedule C. 4835, Not a trade or business, it's a rental. Schedule F, yes, eligible. Open it up to the ag business, and somebody in the ag business probably has a friendly lender down the street. Well, they will expedite, handhold you through the process. You could probably apply today if there's any money left. And they will have the loan for you tomorrow. That's kind of the way it works. So, but my point that I started out with was, if I've got a Schedule C person with no employees, how do I get the Paycheck Protection Program loan? And you get the amount, $8,000 a month, and so I get $20,000, and that's based on my 2019 return for self-employment. I don't have to generate any income. How do I get the loan forgiven? Well, the max amount that you can pay yourself if you're making more than $100 is $15,385 in 2 weeks, except you don't have to pay yourself anything. That's automatically the amount, owner compensation replacement, that you're considered to have received. And that's based on your 2019 income. So all I have to do is show that I paid rent, interest, utilities of at least $5,000 based on my numbers. I don't have to show that I generated any income. Now, if I have employees, and just think about this, my Schedule C, I just do it like this. My Schedule C, line 31, is $120,000. Payroll for employees. I've got somebody that makes $60,000, and I've got somebody that makes $36,000. I'm doing something that's divided by 12. Now, and let's assume that these payroll costs also include retirement contributions that I make on their behalf, payments to a group health insurance plan, health reimbursement arrangement. To me, that's the same as a premium payment. I don't know if the lenders will look at it like that, because that's not a premium. It says a premium paid to group health plan. I'm kind of self-insuring with regards to that. Now, if that's included, that's going to be about $8,300 a month for me, $5,000 a month for them, and $3,000 a month for that person. So that's 8, that's 16.3 of compensation. I'm going to take 2.5 times that, and that's going to give me, let's say a Paycheck Protection Program loan of I cap it off at $40,000. Now, how do I get the loan forgiven? And what I'm going to do To get the loan, so if you look through here, what that's doing is adding in your Medicare wages, and tips, whatever, plus any pre-tax contributions for health insurance, or other, this might be it, or other fringe benefits excluded from taxable Medicare wages. That's to me, that's your health reimbursement arrangement. Subtract any amounts of an employee in excess of 100, annualize amounts to whatever. Then you add to that Schedule C line 4. Schedule C line 19, and any unemployment tax or state unemployment tax on your quarterly reports. But it doesn't say anything about workers' compensation. And calculate the average, add the difference between these amounts, which is 0, and I came up with an average monthly compensation of $16,300. Multiply that by 2.5. I said I only wanted 40. Now, documentation, 2019 Schedule C, etc. Same thing with a partnership based on my SC income for 2019. So that's